Hey y'all, Greg Silverman here. Welcome back, folks. Welcome back. um, Seriously, welcome back. It's been a while since I've been running some of these. It's been a crazy 6 months of the year, didn't it? I mean, it's one thing to be expecting a correction. It's another thing when you live through it. It has you go through it, man. It's a correction. It's a corrective in your emotional tidal waves. Try that one on. Okay. We like to bring you good articles that everyone liked, shared, have got good statistics involved with them. We love our stats. We do a lot of statistical work, and this one percolated to the top. So let's come with me. Come read with me, and see if we can learn anything. EV, electric vehicle specs, warn about running out of cash. The beginning of the end for the craziest stock bubble ever. Okay, and just remember, we just read an article, previous one about Celsius, so sort of a break in the crypto space. Electric last mile said it might only make it into June so far in the cycle. 25 specs have warned they may not make it, including 6 EV specs. Electric last mile solutions, an EV startup, they went public in June 2021 via merger with the spec disclosed Friday, May 27, after hours, when everyone was ready off for the long Memorial Day weekend. When was this? May 30. So that it wouldn't run out of money sometime between July and September, as it had disclosed 2 months ago. But instead, it would run out sometime in June. That its cash wouldn't even last through June, but only into June. Okay. Somehow, the company had to find new investors, like right this moment, or else it's going to shut down in a few weeks. In its filing with the SEC on Friday, it said. The company expects that without obtaining additional financing, it is sufficient cash to continue operations into June 2022. The company's current projections reflect, among other things, increase in professional service fees, employee retention costs, and payment to suppliers. Interesting. The company is actively pursuing potential sources of liquidity and is working to extend its cash runway. Blah, blah, blah. On May 24th, the company disclosed in a filing with SEC that its quarterly report for Q1, the 10Q filing with the SEC, would be delayed further. It said it still hadn't filed its required annual report 10K filing with 21. It said that on May 18th, it had received a delisting notification from the NASDAQ due to non-compliance with filing requirements. Wow. Wowzers. Let's have a look at the... This is capitalism in motion, guys. Okay. This is their delist. That cannot be pleasant. Okay. The company's management, here I am, is working diligent to complete the Form 10Q as well as Form 10Q. It intends to file as soon as practicable. However, the company doesn't expect to file Form 10Q within the time frame specified by Rule 12B25. The reason disclosed in the 10Q notification, we said in May 2025. Electric last miles and investigation by the SEC. Not what you want to see. Its auditors threw in the towel in February, and the company has not been able to hire a new auditing firm, and has therefore no auditors to audit the financial reports that it hasn't filed. So, guys, I've done a bit of work in the spec space, so I've got some knowledge of what went on there. But look, a lot of these specs, electric vehicle specs, for example, were based on prototypes. They were based on things that didn't even exist. And the spec vehicle allowed you to make these basically outlandish projections of what future revenues would be. And these were companies that had no assets, no revenues, probably some intellectual property that was about it, and a boatload of cash. And they had to go through public audits, hence the auditors nowhere to be found anymore. All right, let's keep reading. So I have some knowledge of this. I saw this going on. It was a spending blitz by companies. It's a normal, if you can say such a thing, boom bust mania. And I mean, you could see it going in, and kind of everyone knew it going in, but people still followed it in. So psychology, man, it's what makes the market tick. Right. In February, CEO James Taylor and Chairman Jason Luo, both co-founders, were forced out effective on the spot after an internal program to share purchase that they'd made before the company announced that it would go public by a merger with a SPAC in December 2020. So now what you got to be thinking is there anything left in these SPACs that is worth salvageable? Many of them still have cash, right? Because they raised cash. The $10 nominal amount which they list at. So they may be trading below cash. That might be something of interest. For investors, this is like, okay, it was fun while it lasted, but now the money is gone. Before the announcement on Friday evening, shares ELMS closed at 71 cents, down 94% from its high in June 2021. I remember reading that in a previous article I featured, guys. Guys. Okay, let's down 94%. Yeah, okay. So equity is basically worthless. I mean, you make this stuff up. It takes a huge amount of talent to produce a shit show like this. Excuse the technical jargon. But during the biggest bubble ever that is now imploding, it's not the biggest bubble ever, but anything would go, and the stock jockeys eagerly play along with it because it was so much fun. It doesn't surprise me that the professional service fees went up, because that's how it becomes legitimized, is through, valuations and auditors and consultants. This mess would be funny as heck if it weren't so serious. Serious not because this will likely be the first SPAC of many in the cycle to go to zero, and it's really nearly there, but serious because it shows all the utter garbage that was sold by Wall Street with huge hype and hoopla for huge amounts of money to the public to make Wall Street and some insiders immensely rich. Duh. We think this is the first time that's ever happened, and it's not the last. Electric last mile. Unique opportunity to be the first EV SPAC cycle to go to zero because its cash burn machine ran out of cash. No hard feelings, folks. This is just how the game's being played during bubbles, and someone always gets to hold the bag. Announced out of money dates. And it's amazing how during the mania, when this stuff looked good and looked like it had value, it was amazing how your psychology was turned onto such a thing, right? And it was easy to buy. It was easy to buy. It was phenomenal, right? Now the psychology has gone 180 degrees. EV startup Canoe, which went public via merger with SPAC in December 2020, since Q1 earnings report that it might not have enough cash to continue operating. It said that there's substantial doubt about the company's ability. So the company is now desperately trying to raise cash by selling new shares and borrowing, shooting for 300 million equity sales and 300 million debt sales. Okay. I don't think they'll be getting that. It's not hopeful that the company is currently under investigation. This merger with SPAC as operations, business model, revenues, revenue strategy, customer agreements, earnings, and other related topics. I seem to, just as an aside, I seem to remember that Donald Trump's SPAC is also under SEC investigation. Class action lawyers are having a field day with this show. Oh, that's an interesting one. Class action lawyers. Make a note of that. Tell you why, because it might be a good business idea. As far as these claims are concerned, is what I'm. Oh, don't freeze my computer. Just to show you that you don't need a whiz-bang computer to be a moron like me. Okay. What am I saying? Class action lawyers. Recently came across an interesting lawsuit that needed financing. So this has kind of piqued my interest. I don't know if it was the same thing, but worth going back and taking a look at that. Numerous executives of the company, including co-founders, the CFO. Still doesn't have a CFO, but only an interim CFO. Canoe has 105 million unrestricted cash on its balance sheet. Yeah. At the end of March, first guidance, it plans to burn about 200 million in Q2, and it has no revenue. It was able to raise 600 million pronto, would extend the run for another 3 quarters to the end of 2020. 2023. It's amazing when you read this that you think that this actually happens, right? What is it about I mean, there is an irrational blind spot in the world that this could happen, right? If we were rational all the time, this would not happen. Right? 3/4 and maybe into 2023, and then 600 million would be gone, and still wouldn't be any revenue. The company doesn't have anything close to production-ready product. It has $0 revenue in Q1, while booking a loss of 125 million. The company would need billions of dollars from investors, not a few hundred million, to get where it's able to generate enough cash. I can't even read this. It's like a sad situation, which will take years, or blah, 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 but the shares have collapsed, okay? Lordstown Motors, which went public, included the going concern warning in its filings, yeah. Shellacked, down 94%. These 25 specs have issued going concern. Going concern, is that it? Electric last mile, at least 25 that are issued going concern warnings so far in the cycle. During the cycle, 232 companies went public via merger with specs. At least 25 of them have been warned recently about running out of cash. At least 6 EV specs have issued going concern warnings, and EV battery makers have joined the group. Yeah. I mean, again, you know, electric vehicles is not going away. I mean, this is a longer term trend. This is to me the same as the crypto sell-off. Again, I've been through 2 boom bust cycles in crypto. This is the second one I've gone through in battery stocks, or battery metals. When was the first one? The first one might have been in 2018, somewhere around there. It didn't last long, and this one didn't last long either. So, you know, maybe we're in for a bit more of a longer one. There's a term called, I think it's called divergence, you know, where boom bust cycles don't look alike. So they would differ, and the next boom cycles might be a longer one in battery metals. So stay with battery metals, I would say. Prices are really low on some of the battery metal stocks. Silver, for example, I don't know if you guys know this, but silver is quite heavily used in solar panels. Bet you didn't know that. So you always thought of silver in terms of gold. Well, silver has got a great use as a battery metal. All right, anyway, I hope you enjoyed that. I certainly enjoyed that. I learned a lot. If you'd like to know more about me and what I do, take a look at some of the links below. Basically, we operate as outsourced CFOs and outsourced chief investment officers for multifamily offices. And we can help out with structuring. We can help out with tax planning, tax advice, helping you run companies, putting in systems into companies, purchases and sales of companies. Take a look at some of our links below. I hope you enjoyed that, guys. Please reach out. Love to hear from you. Greg Silverman out for now.